Hello, and welcome to the Joss Brown Podcast. With over 40 years of combined financial planning experience, we will discuss our favorite topics, concepts, and stories. Hello, welcome back to the Joss Brown Podcast. Today we have Oscar Alvarez as our special guest and Michelle Robinson.
Thank you for having us.
Thank you.
Oscar is a graduate of the United States Military Academy at West Point, graduated in 1982. He is dedicated to serving others and his clients, and we know him mostly for his long-term care insurance knowledge. That's why he is our specialist for today. And he's come and spoken to our group a few times for financial planning meetings, but we welcome him for the episode today.
Thank you for having me.
Thank you. Can you briefly explain the importance of long-term care insurance in today's aging population?
Well, it's extremely important from the standpoint of, if you look at statistics, 70% of people over age 65 will end up in some kind of a long-term care situation. Now, I don't like statistics because they have a tendency to lie a little bit, but 70%, what that means is that at some point, 70% of the population will end up needing some type of long-term care. Now, it may be 1 to 5 days, or it could be the average of 3 years. We don't know that, and there are different numbers for that. But be rest assured that you're probably going to need something in the future as we get older. And as technology continues to increase, we can do a whole lot more at longer ages.
So you and I was talking on Friday, and you said, it won't happen to me. Do you care to elaborate on that?
So most people, when I bring up the discussion of long-term care, and I'd like to call it extended care planning myself, because when we've been talking about long-term care insurance, but it's really extended care planning. Long-term care insurance is just one element of that. But most people don't think it's going to happen to them. They say, well, yeah, friends of mine had that, or that happened to, my mom or my dad or whatever, but I stay in good health. They just don't think it's going to happen to them. And it's hard to convince them otherwise. If they have that in their head that it's not going to happen, they're going to refuse to even look at the options.
Speaking of options, what are the different types of long-term care insurance policies?
Well, they are getting more and more abundant as time moves on. It used to be we had traditional policies that started back in the 80s, and they were generally very specific. It may be just to help you at home or only for nursing homes, things like that. Today, they are more robust. We call them comprehensive plans, but you can get different types. What's happening now in the industry is a lot of the insurance companies are tying the long-term care insurance to life insurance, and so they put them as riders. You have to be very careful, though. Long-term care insurance is very complex, and when you start putting it attached to other items, you really need to go and understand what it is you're buying. And that's where I think it gets confusing in this industry. And why a lot of people don't get long-term care insurance is because it's so confusing. They're not sure what they're really getting. I've had lots of people come see me with their policies, and I explain to them, well, this is what you have. That's not what they understood when they bought it. And so it's just complex. There's a lot of moving parts in a long-term care insurance policy. But you can get traditional policies, which are just, you pay for them until you need them. You've got some now that we call them hybrid policies, where you can pay a lump sum, so to speak, and it's usually pretty big, but you can pay a lump sum and then you never pay for it again, and it's paid for. And then you've got the life insurance combinations as well. So it's getting pretty robust, but you have to be careful what you're looking at.
Yeah, and I see where, because the terminology around, use it or lose it. And in today's world, many people don't want to lose anything because they're already paying life insurance policy, health insurance, and they're paying insurance on your home. And it's one more thing where here I'm paying this and I'm going to lose it. So I think people are more inclined to want to get that bells and whistle off that debt benefit because it's something else that I could get back in return if I don't end up using this policy.
And you're correct. Most people do not like the use it or lose it mentality, and that's why most people are going to the hybrid type policies today, but they are more expensive, and so you have to have the financial ability to pay for them, and there's quite a few of them now where you can actually put them on like a 10-year plan or a 15-year plan, so you don't have to put it all up front, but they are more expensive, but they do have the benefits of If you never need it, at least your estate's going to get something at the end of the day.
What's the emotional and financial impact you see in terms of this industry with long-term care?
Well, most of the people that come to me these days, it's in the too late position. They come to me after something has triggered the long-term care and the need to go into assisted living or needing some kind of daycare of some kind. And so we can't do anything for them because it's too late. If I can catch people ahead of time, at least we can start the conversation. But most, like I said earlier, most people don't think it's going to happen to them until it happens. And by then it's too late. I really do try to focus on what can we do planning ahead of time to ensure that we can take care of whatever might come up down the road, because we know something's probably going to happen to at least one member of the family.
Yeah, in the earlier podcast with Dan and myself and Deven, we spoke about that we tend to start a conversation somewhere around late 50s, 60s. And so you're saying most of the people that's currently coming to you, they're coming to you after an event happened and they're not going to qualify for it. Is that something that you would say that's the best time to start having that conversation, late 50s, 60s?
So my experience has been most of the long-term care insurance that I work with now, I'm actually selling it to the children of the people who come see me when it's too late, because they're going through the experience, and it's the people who have gone through the experience with their parents who really see the value of the long-term care insurance, because now they're dealing with how are we going to figure this out, how are we going to pay for it. And so most of my clients who do have that conversation are really the kids of the parents who are going through a long-term care situation.
Got it. And so you talk about expensive. So in this industry overall, how much of an increase are you currently seeing where it comes to the premium on long-term care? And if you were to compare it from 20 years ago to now, how much of an increase are you currently seeing?
Since I started in the 1990s, it's the price has easily doubled, if not tripled, for long-term for the basic policy. Unfortunately, what happened in the early 80s and 90s, the long-term care insurance was underwritten poorly, and so now the people who bought those policies back then, even as long as 10, 12 years ago, are seeing large increases in their policy and their premiums every year. And it makes it difficult for them to keep them as they originally had intended. Now, the industry over the last 10 years has gotten a little bit better about their actuarial numbers, and they're pricing it correctly, but it's significantly more expensive than 15 years ago when I was talking to people about it.
Is there like a surrender clause in long-term care?
On a hybrid policy, you can have a surrender value. It's not so you're going to lose something if you surrender it after X 1, 2, 3 years, whatever the policy is. So there are some surrender values with the hybrid policies. Same thing with the long-term care insurance that's tied to a life insurance policy as well. If it's a rider, there's surrender penalties for that. For the old traditional kind where you're just paying annually or monthly, if you stop paying, the policy goes away, you get nothing back. So I treat those, I explain to people the traditional policies, although they're the least expensive, it's kind of like car insurance. You're going to pay for it every month or every year, and you hope you never need it, but it's there if you need it.
Yeah.
Mm-hmm. What are the different factors when choosing a long-term care insurance policy? I know we talked a little bit about it last week, but is there anything that we missed out or major ones that you would think of?
The big factors for me is what is the client trying to achieve with the long-term care policy? So you may have a client that says, well, I want the policy to pay for everything. Well, you're going to have a very expensive, robust policy. Or you say, well, look, you've got, and I'll just give you an example of a client not too long ago. So they had a pension, they have Social Security, and they have investments. I said, so how much of a policy do you need? Because it's just now that person. The spouse has passed away. It's now just that person. So how much are you going to need above and beyond what you already bring in every month to take care of yourself? And that's the kind of policy we design. So if he only needs an extra $1,000 or $2,000 a month, then we design the policy to fit that. The hard part, and listening to your podcast last week, is the inflation protection. You can get anywhere from 2 to 5% inflation protection, but that's the most expensive part of a long-term care policy. So what I generally tell folks, even at 5%, it's not going to keep up with the inflation of healthcare. So what I generally tell people is buy a larger amount of benefit per month or per day and smaller inflation. And it actually ends up becoming a little bit less expensive that way. But it's, once again, you're trying to look into the future, and that's difficult.
Yeah, and I'm happy you touched on that. So in the previous podcast, Dan and I was talking about daily benefit versus monthly benefit. And so I mentioned that monthly is superior. What is your take on that? Which one is the better option here? Is it the monthly benefit over the daily?
I like the monthly benefit. It makes it easier, and if you can get a policy that's an indemnity policy, so it just pays directly to the client regardless of what their costs are, I think that's superior, because then the client can decide how they're going to use that money. The more traditional policies that are not indemnity, a lot of the companies now do work with like assisted living or nursing homes in billing. So a lot of them are doing that now, but it's still burdensome when you're doing it on a daily basis. It's easier to just do it monthly.
Yeah. So how do you propose that we start a conversation with our loved ones about long-term care planning?
The way I start the conversation, once again, it depends on the age, but generally speaking, I usually ask them, so have you or anybody in your family ever had to go to assisted living or nursing home? And that brings out, oh yeah, 99% of the people age 60 and over have had experience in some way, shape, or form with a loved one, their family, grandparents, their own parents, whatever it may be. And you let them discuss that, because that's what's going to trigger, yeah, this is important, we need to have that discussion. And that's really a simple question.
Yeah, in our firm, Joss Brown Wealth Advisor, we think that it's important to have the discussion with our clients about long-term care, because, of course, the better we can plan for that is the better the client will be in the long run. And as Dan mentioned, it's something that you're going to need in late life.
Yes.
And so the better we can plan for it, it's the better the client will be. And so in hearing that from the last podcast, how important do you think it is to make sure that financial planners are having these discussions?
I think it's crucial because, for a lot of financial planners, we're dealing with clients' money, managing their money in some way, shape, or form. And you're going to have to start working, using those assets. When I talk to folks, I said, if long-term care insurance isn't appropriate for you, fine. Let's have the conversation then of what assets are we going to use first? Which ones make the most sense? And then that goes into the goals and what might be earmarked for one group of people versus another. You got to have that discussion, because if it happens, you at least have to have a plan. If they don't qualify for long-term care insurance, that becomes even more important. Where are we going to get the resources? How are we going to do it? And then who's going to help? Because if you're the one needing the care, you're not going to be able to do that yourself. So who's going to help you? And I see a lot of folks when they come see me, they're trying to keep mom at home to save money, but a lot of times the care of home care is more expensive than going to the assisted living, and some people don't realize that. Everybody wants to stay home, and I understand that. Nobody wants to go to assisted living, but assisted living these days really isn't as bad as we have envisioned it is. It's not it's not your grandmother's nursing home anymore.
Yes.
They are very nice and robust. They're very community-oriented communities now, and you even have adult daycare. So there's lots of things that go into this planning. It's not just about the insurance and the money, but it's also about caring for the person and who's going to take over. When somebody goes into assisted living, the daughter, the son, whoever it may be, they're now going to live two lives, their parents and their life. And how do you make that work?
Yeah, and you mentioned that, and I was just like, I had the privilege of visiting one of those nursing home, and they had some great fun activities planned for them, and I wanted to stay to be involved in those activities. It's like, oh, there's some good planning here. I could stay for this, and they have great trips planned for them as well. So you're right that what we envisioned many years ago, it's not our grandmother in the 1950s nursing home or 60s nursing home. It's way different than what we could envision. So yes,
Right, and you got to think too that back then. When people did go to nursing home, it was unfortunately they would pass there, and that's not the case anymore. I mean, I've got clients that have been in assisted living 5, 6, 7 years, and they're very happy there, and their families are very happy with them being there.
So tell me, what we've heard that some people say, well, I'll self-fund, and so what are the pros and cons to self-funding long-term care versus getting a long-term care insurance policy?
Well, the pros are if you can do it yourself, it's great. But it's also if you have the financial wherewithal. I mean, if you've got the funds to do that, because you don't know how much that's going to end up being overall. I am a big proponent for if you can afford to self-fund. I think it's actually less expensive to go ahead and get a policy. You're leveraging your money now, and so that's a whole mathematical thing. You have the computation you have to do, but with self-pay. The big things there is you have to then coordinate everything yourself. And that to me is a big negative. So you got to figure out who's going to do the home care, if you've got home care, who's going to manage the home care. If you're going to assisted living, who's going to take care of the assisted living for you, and then if you live in a home, and especially if you're single, it's, well, who's going to manage the home? Are you going to sell the home? Who's going to do all that? So there's a lot of moving parts if somebody's moving into assisted living and they're doing it on a self-pay basis.
Oh, wow. You gave me a lot of food for thought there, Oscar, because I was thinking I'm self-funding this, so this is going to be easier for me. I have leverage. I have the ability to say where I want to go, what I want, who to take care of me, how I want my funds to be spent, and the quality of life that I want. And now you're just throwing a monkey wrench right up in my plan.
It's a lot more work on the person, and like I said earlier, it's not just you anymore. It's the family, your family, or whoever your power of attorney is. Someone's got to do all that work for you.
Well, thank you. Anything or any parting words that you want to leave with our audience before you go as the expert here today on long-term care?
My parting words would just be you need to at least start the conversation and understand what it involves and what it doesn't involve. There's always a cost to insurance, but insurance may not be the solution for everyone. But have a plan, because the worst thing that can happen is everybody's trying to figure out, and they're running around with like chickens with their head cut off, trying to figure out what they're going to do and how they're going to do it. And at the end of the day, what you want is the best care for your loved one. And so it's important to plan for it.
Thank you. So you heard it here first from our expert, Oscar, and from the Joss Brown team. I would say start having the conversation with your financial planner if you're over 50. Let's have the discussion so that we could plan for your future with long-term care or any other options that you may have. We thank you for being here. We thank Deven for being a moderator, and I'll have Deven close out now.
All right. Well, thanks for all being here. We'll see you next time.